Welcome back to the Washington State Real Estate Investing Podcast. I'm your host, Jeff Udick, and today we dive deep into the world of property management. Ever wonder how a background in hotel management can revolutionize property management? Well, today we're exploring this unique intersection with our guest, Eric Magnuson. Eric brings a wealth of experience from managing a diverse portfolio of properties, understanding the nuances of acquisitions, and the importance of building relationships in the real estate world. In today's episode, we'll uncover how Eric's journey in real estate and property management influenced by his family's legacy and a pivot from hotel to apartment management has led to an innovative approach in maintaining and growing property values. You'll gain insight on navigating market dynamics, the critical role of effective management and ensuring occupancy, and strategies for new investors entering the market in 2024. Before we jump into today's conversation, I'd like to extend our gratitude to Inspectify.com for their continued support of the podcast. Their commitment to providing top-notch inspection services ensures that investors like you and I can make informed decisions with confidence. Make sure to listen to episode 30 of the podcast, where I interview Josh Jensen, CEO of Inspectify.com and a Washingtonian. And with that, here is Eric sharing his story, offering actionable advice and strategies that you can apply to your own real estate investing journey. And let's get to it. On with the show. Welcome back to the Washington State Real Estate Investing Podcast. I'm excited to have Eric here with us today. Eric's going to be talking about his business around property management here on the west side of the state. We're going to be talking about the west side of the west side. So the west side of the state and then west of Seattle, the Bellevue, Kirkland, Renton area, for those of you that are familiar with that. Eric, welcome to the podcast. Can you give our listeners just a bit of background of where you are in your real estate journey and your property management company?
You got it, Jeff. Thanks for having me on. I'm excited. So first and foremost, I started in the family. My mom and dad started a management company back in the mid-'70s, which grew to be a large regional company, which my dad later sold. And then he partnered with a home developer and brought that company. He was a co-founding shareholder on the New York Stock Exchange.
Oh, wow.
And so back in the early 90s, Wall Street days, suit and tie, I saw my dad and he was this big hero. And I said, I know what I want to do when I grow up. And that was kind of like, that's what I'm doing, real estate investment management, with a specific target of apartments. And so we're talking about 20 years ago. In my college days, there wasn't a property management program per se. And so hotel management was the closest thing to it.
Yeah.
My dad says, hey, son, go get your hotel management degree and bring that back into the apartment management sector.
I never thought about that. That's such a great little insight.
Yeah. And he said that, and, I'm a teenager and I'm thinking to myself, hey, whatever he says, I trust.
Yeah.
And look at the guy. But he says, you're going to learn, because we love to travel, in the similarities of the properties and, staffing and
sure,
and the kind of the, check in, check out, leasing, move outs, all the very different terms, very similar.
Wow. I never thought about that.
And you bring that concierge mindset, that red carpet treatment into the property management industry, and all of a sudden you've got attract and retain and good reputation, well lubricated building. I'm talking curb appeal, from the outside in, friendly staff, professional, well dressed, well groomed, well mannered. And I started to do that, implement that in my early days. And so I graduated with a bachelor's degree, and I kind of fell into my first position out of college. It was a management company in San Diego that specializes in homeowners associations.
Okay.
And I had the option to go apartment management as a leasing consultant or work for this community association management company in a more corporate role,
Sure.
if you will. And I opted to go into the corporate role. The guys were, wearing suits and ties and whatnot. But it's funny because I didn't actually know what I was getting myself into specifically. If anybody who was ever managed homeowners associations, you know quickly how difficult they are. The best way I can describe it, or compare rather, would be take a 200 unit condo versus a 200 unit apartment building. The 200 unit apartment building is most likely owned by a rational person.
One rational person versus 200 irrational.
Partnership, investing, private equity, pretty slick, sophisticated shop, who's realistic and rational, versus 200 different owners of a condo, that they're complaining and, making your life hell, and you got paperwork. And, but all being said and done, I did it. I figured it out. I did it well. And after 2 years, I figured out what I didn't want to do for the rest of my life and my career. And so I moved. This is in San Diego. I was, moving back closer to home, and I got a job with a local commercial and residential property management company, and I fell into a business development role. And so this kind of coming with this management background, and now I'm coming into this business development role where I'm hired to cold call and grow the management portfolio. I'd never done that.
Yeah.
But I knew buildings, and I kind of knew what to say to owners and try to convince them, selling the company and the people. But all of a sudden I figured out the drive-by, taking photos of their properties, hanging gutters, overflowing dumpsters, doing a shop report about their staff or how unprofessional they might have been, and they weren't aggressive on closing. And I figured out how to put that together in some kind of a shopper's report and give that feedback to some of those owners. The owners were saying, well, my management's good. And I said, well, good gets in the way of great.
Yeah.
And here's how we would manage it and how effective, our approach is. And I was able to, and this is, now mind you, this is going into the great financial recession. This is 2008, 9. So we're kind of into the mix. And all of a sudden owners were staying put, and I wasn't bringing on new, and everybody, bank accounts, properties, values, it was hurting. And so it was time for a change. And so I made it into, a direct property management role for Riverstone Residential Group, which at the time was the second largest management company in the nation.
Wow.
And the company did that by buying huge regional companies throughout the nation to combine it into one. The local guys here, who I knew by reputation and my dad used to be competitors with, smart guys, I went to work for them. And over the next 5 years, I learned from the best, working for the best, managing, third party, tax credit buildings, mid-rise, high-rise, mixed use, garden style.
What a great experience.
Out in the suburbs, downtown Seattle, great experience. Managing the retail component, doing CamRex.
Wow.
Lease turnover on the retail tenants. I was doing it all. I was into it. And I just loved it. And I finally found my niche, my sweet spot.
Yeah.
What I figured out, previous roles, but to their credit, got me to where I was, one way or the other, either learning the basics and or learning what I didn't want to do and how to look at things differently. And so in 2015, Riverstone got bought by Greystar.
Okay.
And Greystar is the largest property management company in the world. And I went through that merger for about a year until the principals who owned Riverstone came to me. They kind of heard that I was looking for more of an investment broker role. I had been out there shopping with the local big dogs, apartment brokers, and learning more about that role and capacity, what it would take and where the market is and all that stuff. Well, one of the principals, the company is Investors Capital Group, came to me, said that he was looking for a new acquisitions guy. I didn't even hesitate.
Wow.
I jumped on. I mean, acquisitions guy, unique role for a lot of companies, private equity, institutional level. I mean, someone who is hired specifically to go out and source deals, go schmooze with brokers, go into markets, analyze the apartments, underwrite them, figure out what we can pay for the return threshold. It was high level.
Cool.
And coming from the high level management background, bringing that into the acquisition investment role was, in my opinion, crucial. It was a lot of the guys, and I say this with all due respect, and we might touch on this later, but and my biased opinion.
Yeah.
But the guys who understand the deals and underwriting them and forecast better, I think, have done it themselves. They've either had some type of management role where they've either managed property or asset types, and so they understand from a position of experience rather than theory about what it takes to get to these rent projections, what it takes to actually get to these expense goals, and a capitalized budget, right? What does the property need, and what do you get in return for that, and what don't you get in return for that? What does the property need? So that I had done a lot of that work from the management, bringing that into the acquisitions role, and was successful doing it. I oversaw 8 direct acquisitions, a little over 1,500 units of purchasing for about $200 million that placed about $75 million in private equity.
Wow.
And at that time, a lot of shops are in the business of they're in the mindset of getting the fees done. They've got the lights, they've got the bills, they've got the payroll. We weren't that, but we were still buying, and there's always a good deal to buy. And so we were buying. I was buying in the hot market of later 2018, 2019, and in the early 2015, 2016. So I saw 7 caps buying down into 3.5, 4 caps.
Wow.
Which unfortunately, guys today, or shops today rather, that went out on their own. So in 2020, I went out on my own, or I attempted to.
Yeah.
And for the next 2 years, with the economy, the market, interest rates, I couldn't make sense of anything on the acquisition side, at least on the deal front. Looking at apartments, I submitted a few LOIs, got close.
Yeah.
There were even 2 deals where the broker said, "Hey, can you come up on this price?" And it just didn't feel right.
Yeah.
Something inside me said, "Don't do it. No way." I mean, it was like $50,000, and I was already pushing it. And I'm not the guy who pulls all the levers.
Yeah.
I don't, over forecasting and rent projections in perpetuity. Guys are using 5% in rent growth, they're using 3% in expense growth, and they're using a low exit cap, and then they're using, they're refinancing in year 2 or 3 with a juicy return. They're undercapitalized on the budget, on the CapEx work. I think, to my credit, but the management side, I understand all of that stuff. And so I understood there was nothing more that I could pull, and that is what it is. But then it hit me, because then I started playing with the numbers, because I'd ask the brokers, well, where are the buyers at? Who got the deal and for how much? And I put that purchase price in, and I went back to my underwriting, and I figured out how they were doing it.
Yeah.
And I just thought to myself, wow, I hope they're going to get in a world of hurt, which now, with a lot of those loans coming due, a lot of those guys were doing floating rate, interest caps, and doing all of those things that I just spoke of. And now they're either going to sell at a loss, or they're going to refi at a loss. So I think that'll be some of the market that opportunities that might be coming over the next few months of those types of sales.
Have you seen any of those sales starting to hit yet?
I just saw one last week.
Okay.
Yeah, I saw one. I can't say much about it, but it's in Pierce County.
Okay.
About 85 units, and a developer, they're in it. they like the deal, but they want to keep the deal, but the current debt is super expensive.
Yeah.
And in order to refi to agency, they need to go cash in to the turn of about $4 million.
Wow.
So it's, it's being whispered around, low 20 millions, if you will.
Wow.
And so that's happening, and that's going to happen.
Yeah.
Which either sophisticated shops are just going to roll it in, they've got their funds, and hopefully their other deals will help take up the returns, and maybe some will be sold as bad as others.
Sure.
But it's going to happen. And we'll reading headlines and talking to brokers. On the large scale stuff, I don't know if the small private owners, the mom and pa, the doctors are having that much trouble. I think for the most part, and in my investment days, what got us through those types of storms was underwriting and using long-term debt.
Yeah.
We were putting 10-year, 12-year Fannie or Freddie on those loans, not over leveraged, and, no floating rates, maybe an interest only component to help get the cash on cash out of the gate. But that was it.
Yeah.
And we weren't underwriting a refi or anything. So, we'll see. We'll see what the market bears and who can get out of it. I worry partly because interest rates, although coming down slightly, so that's fine. For someone to put that type of debt that I'm talking about, a 7 or 10 year Fannie Freddie, would be about a 180, 200 spread over the 10 year,
right?
Which is like, maybe high fives, low 6%.
Yeah.
And they're still giving out some interest only, maybe not full term unless you're a big customer and you've got a proven track record. So there's still, attractive debt out there for guys that are going to be buying these deals. Although the rent projections might not be there.
Yeah.
So to overcome those purchase price, I don't know yet.
Well, and I think, are you just finding like, are banks being more, are banks being stricter on just wanting to see closer numbers? I think that's two of the things that I've just kind of noticed is that just like banks are just really strict on that. And and I'm small investment, not large investment, but they don't want to give you the loan. And I think part of it is they know as soon as this thing goes down to 6%, let's say it goes down to 6%, everybody's going to refi. Right. And then, and I feel like the banks are just like, well, we'll just, make our money up front with making you buy down points or, having you 8% now, because we all know you're going to refi later.
Correct.
And it's very interesting.
Yeah, no, you're right about that. I mean, the guys that are going to be doing the deals, and maybe it's not the Fannie and Freddie, maybe it's life insurance companies, pension funds, but it's the big dogs. It's the big players, the private equity, institutional guys that are out there. They've got the relationships with the banks. They've got the relationships with the deep pocketed, life insurance companies. And I'm seeing, some activity on LinkedIn. Those big guys, they're buying 200, 300, 400 unit. Well located, insulated buildings, if you will. But small guys, you're right. It's going to be difficult, if not impossible right now, which, if you take it from the banker's perspective, that's pretty smart.
Yeah.
They don't want that on the balance sheet. And certainly over the years, they do not want, they don't want to be the owner. They don't want REO. So, we'll see.
Yeah.
It goes to my, going back to, effective underwriting and effective management. I'm a big guy on management. You'll hear me say that numerous times. Manage, adapt, manage accordingly.
Yeah.
Always scrutinizing, study the financial statements, revenue, expenses, CapEx, everything. Visit the properties regularly. Stay up on the market, research everything and anything you can do to protect that bottom line, protect that income stream.
What advice would you give to newcomer? Like if there's somebody trying to get in the market now and looking at this, I mean, you just mentioned a lot of really great stuff, but if somebody was coming to you and like, okay, Eric, I'm ready to jump, I'm ready to go in, what is maybe some advice to a newcomer that you think is like in 2024, kind of looking where we're at that you might give to someone coming into the space?
On the investment side?
Yeah, on the investment side. Yeah. And then maybe also on the property management side. I don't know.
Sure. Yeah, on the investment side, it's going to be, you're probably not, depending upon who you are and who you're going to do it with. If you're, kind of a lone, one-stop shop, your own, you're with a team, it depends. But I think in general, right now it's relationships. Relationships will get the deals, right? Demand is, it's not as high as it was. Supply seems to be, a lot of guys on the broker side and investment side think that 2024 is going to be the year where you can see light at the end of the tunnel.
Yeah.
Whereas 2023 was mostly a hold pattern, although there were some transactions.
Yeah.
But I think going back to the acquisitions roles, the investment people, it is crucial and it is so important for those guys. If you're listening, get in front of the brokers, get in front of the people shaking the deals loose. They want to know you. They want to do deals with people they like, and in-person meetings. Take them out to lunch, coffee. For me, working for the previous investment company, it was mostly West Coast that I was overseeing. So multiple markets. I was on the plane, flying into Utah, flying into Idaho, flying into Oregon. All of my markets, Reno.
Yeah.
And giving all those brokers a heads up that I was coming into town, setting up schedules, happy hours, lunch, coffee. And, maybe they didn't have a deal today, but boy, I tell you what, when they shake something loose, guess who is calling me?
I love that.
And I think it's so important for those young guys getting started to understand, not those deals, technology these days, but it sounds old fashioned perhaps, but get out there, get into the markets.
Yeah.
Go kick the tires, go visit the properties, go visit, recent sales, understand the brokers, what they've recently sold and what they sold for. That's important as well. Getting a handle on that type of activity. And I would also say, understand, in addition to talking to brokers and investors, talk to the management companies, right? What are you seeing in the trends? What's going on operationally? Where are rents going? Where are expenses going? Talk to vendors and contractors, or people turning units.
Yeah.
Where's the price point today? How's the supply chain? It's amazing on how all of those pieces work together. Because if you're talking to, the contractors and the vendors and things are, gosh, Eric, we're not doing a lot of work, or we're doing a ton of work and people are still doing a value add play or renovating units.
Yeah.
It just tells a lot.
Yeah.
And, talking to developers, what are they doing? What's in their pipeline?
And we've, almost every episode of this podcast, it comes back to almost everybody says it's all about relationships, like you've got to get out, you got to be doing stuff and you just never know, and I was just thinking as you're saying that, my wife and I we're getting ready to try to figure out how to build a duplex on this property, and listeners know what I'm talking about. And so I reached out to my broker and I was like, hey, look, this is where we're at. This is what I'm looking for. Like, can you help with this? Do you have any products? Do you think this is? And he writes back and he's like, no, but I've got somebody that might have a product that'll work for you. They can fund the construction and then come back to me and we can do a commercial loan on it. But it's just knowing people, right? And they know me because we've done deals before and they know that when I say stuff that it's there's meaning behind it. But just having those connections to be able to reach out and say, this is what I'm trying to do. And, people know people. So even though he didn't have a product at his bank, he's like, yeah, but I know somebody who has a product that I think is what you're looking for. Right. And so it's just all those connections of, like, to your point of get in front of people, talk to people as much as possible, because you just never know, when those connections are going to come up, and that's how you find the deals. And I love the idea of talking to property management companies like yourself, like, hey, I'm looking for a 30 unit apartment building. If Eric, if you know one that's coming online, hit me up. I'd love to know if you hear once, there's inklings that somebody's looking to sell. You never know.
Absolutely, Jeff. Yeah, no, you're dead on. I echo that. Relationships are key.
Yeah.
Who you know and who they know.
Yeah.
Right. Just to your point about, hey, I might not know or I might not have anything, but I'll put the word out.
Yeah.
And if they like you and they trust you and they know you're going to perform, boy, oh boy, they're going to be on the hunt. Because it's, everything you always want to take care of your people.
Yeah.
And when you can take care of them, you'll take care of them.
Yeah.
And they want that to be known. So I would just say, going back, relationships, pound the phones and get out to coffee meets, whatever you can.
Yeah. Talk a little bit about your company, Three Keys Property Management, a little bit. How many properties now do you have under management? And what are some trends from a property management standpoint? What are some trends that you are seeing as we kind of get into 2024, 2025? You talked a little bit about technology. How is that playing maybe even a greater role in the property management space?
Yeah, great questions. In general, right now, so Three Keys under management is just under 300 properties.
Wow.
Residential, so mostly single family residences and a smaller percentage of apartment communities, kind of that 4 unit to 15 unit size. Mostly King County, 60% east side, so Bothell down to Renton, east to Issaquah, Sammamish, Bellevue, Redmond, Kirkland, with the remaining 40-ish% with a Seattle address. Our office is in downtown Issaquah. I live in Kirkland, but I'm out in the field a lot, and so it's a good size portfolio. For the viewers, I just bought Three Keys a few months ago in August, and quickly it was going back to my point about the deal market. I couldn't make any sense of apartment deals to buy.
Yeah.
And so I had to, with an entrepreneurial spirit, I was forced. I had this much cash set aside. My wife works full time. Got a 4-year-old, almost 4-year-old. We've got bills, and I'm looking. Boy, if I don't get something done, I'm gonna have to go back to work.
Yeah.
And so I started looking at businesses for sale, and number of industries and businesses, and lo and behold, Three Keys came out.
Yeah.
And great couple were the sellers, married couple, retired, and just couldn't have been more blessed about the opportunity. Great team that came in place with that company.
Cool.
And so it's been really great so far out of the first 6 months here. The trends that I'm seeing already are owners. A few owners have given notice to sell.
Mm.
Last year was a hold pattern. They're seeing these interest rates slightly go down. It's not 8.5 anymore. It's down to 7, which historically is low, but it's not. It's a little bit better, and they're in need of the cash, and so they're gonna sell. On the flip side, that's not such a bad thing, because I think I've got 9 notice to sell, and I've got, of those, 6 of the listings. So I'll lose the management, but now I've got the listing,
nice.
And the commission on that is a few years worth of management.
Yeah, right.
So that's okay. Although I am long term and I like the residuals, but I think so. I'm seeing that trend, although it's not huge.
Yeah.
And the other trend I'm seeing is slowing rent growth. Vacancies are slowly rising.
Okay.
And this is, now mind you, this is single family residence space. There's a lot of similarities with the residential apartment, but some nuances. And I'm seeing move outs. People are breaking their lease, or they're moving out. They're not renewing, and they're either relocating for new jobs, or they're downsizing.
Okay.
And so I'm seeing that. And interestingly enough, on some of these re-rents, those new rates are going to be lower, either similar or worse, lower than the previous tenant rental rates.
Yeah.
And so that's an idea of what we're seeing in the market right now.
Is there because there's more product coming online of building, new buildings coming online? Like, we're kind of getting past that, pandemic glut that I knew there was a lot that was being built. Is that what you feel like that's kind of what's happening here?
I feel like that's a significant part. I think there's other things that are a part of that too. I think the affordability factor, to the point of people wanting to downsize, they're looking for a lower rental rate. Maybe they're actually being forced to go back into the office now and not work from home.
Sure.
And so I think it's a number of things, but it's still so early on that I don't think we even have a handle on what exactly is going on. I mean, this is just happening in the last 2 months.
Yeah.
So it's happening quite quickly.
Yeah. And I will say we're seeing the same thing in the Spokane market. I don't know if anybody here can comment on the podcast, but our properties over in Spokane, We had a couple turn last year, and but the rates were pretty much the same because all of ours are single, like fourplexes are biggest thing. Most of them are duplexes. But this year we've started to see the rents drop by $100 or so, $150 a month drop in rents, even in Spokane.
Yeah. Wow.
So we're starting to see that just come, the things are just starting to settle a little bit for sure.
Sure. It's the old, going back to my hotel management, I learned a little phrase called heads on beds. You're managing for occupancy.
That's right.
Focus on taking good care of your current customers, the residents living at your properties, not going so aggressive on the renewals so much that they're going to, you're going to push them out and get vacancy.
Yeah.
Adapting to the market, understanding and, managing for occupancy to protect that income stream, protecting that cash flow.
Yeah.
It's important, because now is not the time to go out and, push your NOI with the rent growth.
Exactly.
That's going to be done with the occupancy.
Yeah, I agree.
Yeah.
And that's even what we've been doing with a couple of ours. We just had a couple renews, and we've gotten really good at giving people options. They know that rents have to go up, but, we were giving people options like, well, if you sign a year lease, it's going to go up, $100. But if you sign a 2-year lease, we'll only do $75 because now we're going to get you in or $50 but we had you for 2 years, right? Like we've got heads on beds. I love that. Right.
That's great.
And so, we will take a little bit less, but we know we've got you in a 2-year, a 2-year lease. And so we've been playing with giving people options, and being able to just play with whatever those rates are to try to just keep people in our units. So
that's great. Good strategy. Yeah, that's great. Yeah. Good to hear.
So
good.
Well, awesome, Eric. Thanks for taking time to talk to us today. If there are people listening who maybe are looking for a new property management of their properties, or want to reach out to you to have more conversations about what you're seeing in the market, where is a good place for them to reach out and contact you?
Great question, Jeff. And by the way, I would love to talk to anybody. I'm an open book, and I'm here as being a resource, any opportunities, answer any questions. I love being here for anybody that's looking for any type of information.
And it's all about connections.
It is. It really is. Yeah. And, I think you can find me on LinkedIn, or you can email me directly at Eric, ERIK, at wakere.com. Wake, WAKERE.com. Eric at wakere.com.
Awesome. Well, thank you, Eric, for spending time with us today. Really appreciate it. It's great to just get your insight. And very rarely do we get people on this podcast that are talking about big apartment units like this. It's been great to just kind of dig in and see where you're seeing with just that lens of 2024 in the future. So really appreciate it.
You're very welcome, Jeff. Yeah, it was great to be on. Thanks for having me. Appreciate it.